And the reverse carry trade theory that is out there is a very interesting one because obviously the Bank of Japan, giving away free money for a long period of time, eventually you got to pay the piper.
for sure.
So explain to our audience what you think the carry trade does in terms of its impact on XRP and what we'll see coming out of this in the future.
Well, I call it the domino theory. I put it out a little more than a year ago, and it involves a reverse carry trade. So there's some catalyst that causes the Bank of Japan to raise interest rates pretty aggressively in a
What would be the catalyst?
oil. I think there's going to be some type of spike in oil, which would drive energy costs in Japan and would require them to push interest rates up to mitigate the inflation that
Okay.
they would see in their economy.
Okay, so if you had that occur, because you think about it, the US has bailed the Bank of Japan out multiple times, mainly to help well, this is an interesting scenario because if you think about it, because they're trying to keep that interest rate low, because if you look at the reverse carry trade, and if those notes started coming due, most of that is security held, so you're talking about bonds and treasuries that would immediately start to liquidate out of the US economy. That would be catastrophic, you
Yes.
know? So
Right.
what replaces that? Explain to me what could replace that kind of where if a reverse carry trade and an interest rate rise in Japan were to occur, how could we avoid a cataclysmic effect on our bonds and treasury bills?
So they've already backstopped it with the Genius Act. So the estimated volume of stablecoins that'll be issued is around $2.3 trillion, which just tends to be about the foreign debt that's outstanding that would flow onto the market.
Mhm.
So if you put that in place and you know that these banks are ready to go, they're ready to issue their stable coins, you would drive demand here domestically in the US for them to issue
Bingo.
the stable coins, and they would buy up the treasuries that float onto the market, and that would stabilize the bond market.
Alright, so stable coins, RLUSD, USDC, et cetera, all out there being backed one-to-one with US Treasuries, that's kind of the supporting backstop that you're claiming.
And you would have, the yen aggressively appreciating against the dollar. So,
Yep.
and other currencies. So people liquidating positions into other currencies would have to swap through FX back to the yen to be able to repay those loans.
Yeah, and the amount
That's
of
where I think
FX.
XRP could play a role.